Hello and welcome to Web3 Diaries. I'm your host Roshni Shingre.
Hello, I'm your host Shikha Singh, giving you your daily dose of news snippets from the Web3 universe.
Hello, I'm your host Vishaka Thakur. Let's start with the news for today. The Tornado Cash token is up 10% after a proposal submitted by a wallet address linked to a recent attack on the decentralized autonomous organization's governance state looks to reverse the malicious changes. The attacker posted a new proposal to restore the state of governance. User Tornadosaurus Hex wrote in the Tornado Cash community forum, adding that there is a good chance that the attacker would execute it. Tornadosaurus Hex said that the attacker is reverting the TORN tokens they gave themselves, which gave them a controlling share of the governance votes, back to zero. Given the attacker's holding of TORN governance tokens, the proposal looks as though it will pass when voting closes on May 26, though it's unclear when the action will be executed. When the proposal passes, the malicious code that the attacker integrated into the protocol, which allowed them to steal voting power from others, will be removed and the governance of Tornado Cash's DAO will go back to token holders. As a result, TORN was up as much as 10% according to CoinGecko data before settling back down. Oxdead4C, an active member of the TORN community, pointed out that this might be a giga troll to depress the price of the token to increase their holdings at a discount. Structural attacks on DAOs and DeFi protocols, which differ from hacks where the attacker breaks code instead of exploiting it, have resulted in charges, but the attacker behind this exploit is likely counting on the fact that Tornado Cash was recently designated as a sanctioned entity. Over to you, Roshni.
In order to muster in favorable changes, several industries continues to witness an increase in spending towards federal lobbying efforts. As per recent report from Washington DC based on political watchdog OpenSecret, shows that first quarter federal lobbying has topped $1 billion for the second consecutive year. Industries such as healthcare, finance, real estate and energy lead the ranking in lobbying spend with overall spend of $4.1 billion on federal lobbying efforts. As for crypto, despite increasing regulatory hostility from DC, crypto's actual lobbying spend came in at $21.6 million for the year, according to OpenSecret's data. Though this suggests an increase from years prior, but as an industry with a market cap of just over $1 trillion, it wouldn't even crack the top 20 list for lobbying spend. In comparison, Big Pharma spent $375.2 million in 2022. The automotive industry spent $82 million and commercial banks paid $64.6 million to lobbyists that year. The industry's political contribution to election campaigns grew tenfold from 2020 to 2022, totaling $2.3 million in the latter, OpenSecret recently reported. Major contributors include Coinbase, which alone spent $3.4 million on lobbying. OpenSecret's data shows that lobbying by crypto measures is up during the first quarter of the year. Tether has spent $270,000 lobbying in the first quarter of 2023, which doesn't sound like much but is a huge jump over its first quarter 2022 spend of $1 lakh. The Blockchain Association is up as well to $490,000 spent this quarter compared to $460,000 for the same time last year. Stablecoin issuer Paxos also saw a huge jump and its lobbying spend rising from $50,000 in Q1 2022 to $80,000 in past quarter. Of course, this is all dwarfed by TradeFi lobbying spending. The American Bankers Association spent $2 million during this past quarter, while Citigroup spent $1.4 million. Sadly, successful businesses need to lobby to become more successful. That's just the nature of modern politics, and it looks like crypto must do more of it. Over to you, Shikha.
Demand for tokenized versions of US Treasury bonds is soaring as rising yields in traditional financial markets attract fresh capital from crypto investors. The combined market capitalization of tokenized money market funds nearly $500 million and has quadrupled in size this year according to data compiled by CoinDesk. Money market funds are traditional investment products that hold short-term government securities and offer a relatively safe way to earn a yield. Investors have been flocking to these funds for their perceived safety after failing banks and the 5 to 4% interest rate offering compared to bank deposits. The high yields of government bonds have also captivated digital asset investors discouraged by low lending rates and last year's bankruptcies. Hence, a slew of platforms have come up with a few to offer access to them on the blockchain in the form of a token. The first and largest offering investment giant Franklin Templeton's Franklin On-Chain, a US government money fund, which gave a Benji token on the Stellar blockchain representing 1 share, grew to $276 million in assets as of the end of April. This is almost triple the deposits in early January represented by the Benji token supply, blockchain data shows. New challengers are quickly catching up in market share. On the finances, OUSG and Matrix Stocks SBTV tokenized products, both open for investors in January and each backed by short-term government bonds, have ranked in $132 million and $72 million of funds so far, respectively, according to Dune Analytics dashboard by Steakhouse Financial. The tokenization of real-world assets such as government bonds has emerged as one of the hottest trends in crypto this year. Banking giant JP Morgan called it the killer app for blockchain, while Bank of America said it's a key driver for digital asset adoption. Analysts say brands like Franklin Templeton and Ondo Finance are bringing more trust to an asset that would be viewed more skeptically. That's it in today's special segment. For more such updates, follow 3.0TV or log on to our website www.3versetv.io or scan the QR code to know more.